Good morning and welcome to Morning Markets. Today we're going to be focusing on why the US equity market continues to push higher and why corporate earnings are in focus in the weeks ahead. Once again, we have the US equity market reach an all-time high. This is the 35th time this year that the US market has reached new record highs. Now, the equity market is being supported by three factors. Firstly, we've had more positive recent inflation data. Secondly, we continue to see corporate earnings estimates being revised higher. And thirdly, the US market is benefiting from this ongoing secular theme of AI. The US market has some of the largest companies in the world that are really at the forefront of AI technology. But this week it'll be all about earnings, and for the rest of this month and into August, corporates will be delivering their Q2 earnings results for this year. Now, analysts, investors pay a lot of attention on how companies are performing. If we look at earnings growth over the long run, it often highly correlates with share prices. So there is a lot of focus, and this week it'll be all about the financials and the bank heavyweights being JP Chase and Wells Fargo that report on Friday. We'll also get some of the investment banks, Citigroup, also reporting this week, and then into next week we'll get Goldman Sachs, Bank of America and Morgan Stanley. Now, why there's a lot of focus on the banks? Well, you get a really good gauge of the health of the economy, the consumer. You know, if we think about it, banks are really involved with lending, consumer spending, investment. We get overall trends in credit quality in terms of, you know, how many defaults they're seeing. And in addition to this, we get a sense of how banks are responding to interest rates and deposit outflows as well. So a lot to digest, and it will be something that will keep you up to speed as they get released. But it is important for how share prices really react. And I suppose over the last few weeks, we've had the likes of Nike. They've guided that revenues for their fiscal year will be weaker than initially thought, expecting declines in revenue somewhere around the mid-single digits. Analyst expectations were actually for 2% positive revenue growth for the fiscal year. So the market clearly very different to how the company had guided, and therefore the share price has fallen around 20% since the end of June. If we contrast that with Tesla actually is seeing a decline in their sales in terms of the amount of electric vehicles they are delivering. They delivered 444,000 for the second quarter, but this was actually better than what analysts had expected. Over the last week, the share price is up over 20%. So it really does matter how these companies are performing, what they're guiding and what they're delivering, and the share prices will respond to that. So we'll keep you up to date with the key trends. We'll also hear from PepsiCo, more consumer related, and we'll get a sense of how the consumer continues to spend and their overall health. That's everything from us today. If you like the content, please like and subscribe.